All right, we're going to get started. Got it all sorted, I think. Thanks to everyone for joining us for our webinar. I'm Jeff Thurick, I'm Director at Evalesco, and today I'm very pleased to be joined by a couple of my colleagues, esteemed advisors, Marsh and Kathryn. Thanks for coming along, guys.
Thanks for having us, Jeff.
As you know, because you've accepted the invitation, we're going to be talking about ethical and sustainable investing today. So it's a topic that comes up a lot in conversations and across our screens a lot more in recent times. We've had a lot of requests from our clients in our community to dig into this one, so we're in for an exciting conversation. Before we get into the conversation, I'd just like to remind you that what we're going to talk about today is general advice only. We're not taking into account your personal circumstances, and as such, what we talk about may not necessarily be appropriate for you at home. If you'd like to explore any of these topics further, please contact your advisor to have a chat about how it might be applicable for you. We would love to take your questions on the way through today. So if you have any questions, the best way to get them to us is by clicking on the button down the bottom which says Q&A, and you can type in your questions there. You're currently on mute and we can't see you, so feel free to move around and talk amongst yourselves. But to get the questions through to us, type it in via the Q&A box. And because there's three of us today, we're doing things a little bit differently. We're not going to share any slides on the screen today, so you can see us and be fully engaged in what's going to be a very fun conversation. We will be sharing slides for those of you who are visual learners. We'll be sharing some slides after the session. They'll be on our events page where we will be posting the recording of this session, as well as coming out via the newsletter. And if you can't find them, then get in touch with your advisor or email through and we'll send them through to you after the session today as well. We're also going to be running a couple of polls. We're going to start with one up front just to gauge people's thoughts before we kick off, and we'll do another one towards the end. So once I press go on the poll, the question will come up on your screen. We'd love for you to then click on the option which is most relevant for you, and we'll get some engagement going early. So I'm going to launch that poll now. I'd love for you to tell us what you think. So hopefully you can see the poll on your screen. A few answers to consider, so I'll give you a little bit of time to have a look at that one. Great to see some answers coming through now. Let's give 30 seconds more. So the question we've got up there is, which best describes your attitude to ethical or sustainable investments? And the options are actively seeking these and willing to pay more or sacrifice returns. That's received 30% of the votes so far. Nice to have, but not willing to pay more or sacrifice returns has received 50%, or just under now. Only a minor consideration, about 9% of votes, and not sure has also received 9% of votes. So I'm going to end the poll there. Thank you for giving us your thoughts. So that was a question that was posed by Core Data, which is a financial services research business, and their results were reasonably similar to what we came up with there. A few more in the sort of middle range in their research, which was conducted globally by a couple of thousand people. So that shows that, I guess, the people attending the webinar here today are quite focused on considering their options around ethical and sustainable investments, which is what we would expect, having joined in today. All right, so to kick us off, I'm going to invite Kathryn and Marsh to join the conversation. I'll stop talking a little bit. But to kick us off, Kathryn, can you tell us, there are a few different ways of explaining or labelling what we're talking about today. So what are the key differences between ESG, sustainable investing, ethical investing?
Yeah, there's a few terms that come up kind of under the banner of responsible investing. So there's different ways to look at investments and work out where it sits with what you believe in. So for ESG, that stands for environmental, social and corporate governance. So a lot of the public companies are having to do this now, where they've got policy systems and procedures in place to manage how they interact with the environment, the greater social good, and as well as corporate governance. So with social, it's more of the external stakeholders, so shareholders and suppliers. Corporate governance is how they interact with their employees and managers, and the environment is the impact on the environment. So that's one passive way of looking at ethical investing. You've also got sustainable investing, so that is more around applying some filters, negative and positive filters, which we'll probably talk about a bit more, of how you look at what businesses, how they function. And then you have ethical investing, which is much more of an active and personal approach of what you'd like to be invested in and how you'd like those companies to run their business.
Great. Anything to add on that much?
No, I think that's quite comprehensive.
So just digging a little bit on that. So when you talk about ethical investing, how does that differ, or what are some of the things that people might think about when considering ethical investing?
I mean, the most common thing we hear from clients when we talk about ethical investing and opening up that is an option that we can bring to the table is a lot of it's just areas of negative filtering. So I don't want to invest in gambling, I don't want to invest in coal. A few more clients might go more into the positive filtering if I want to invest in green energy or more social good things. And then it goes further into, well, you know, how important is this, and how does that impact on your investing and your goals for why we're investing.
Yeah, I mean, I think another thing that creates conversations is, over the years, products and strategies have changed, and transparency is a really big part about, I guess, our process in terms of how we build portfolios, but also how we engage with our clients. And I guess with that transparency, now clients can start to see what their investments are doing. They can actually see the holdings they have. And I think that is potentially also encouraging more conversations, deeper, richer conversations than we've had before.
Sounds good. We've had a question come through already, which is great. So thanks for the engagement. I guess it relates to your comments, Kathryn, about the ESG and the policies and procedures. So there's a question here which is saying, do we feel the current COVID-19 pandemic will add an additional layer to these companies when they review their environmental, social and corporate governance policies? And if so, how would that flow through the portfolio construction and considerations? Any thoughts on that?
That's certainly the talking point at the moment in investing and advisor world, that it's a very common question now. It's replaced the Bitcoin discussion that we were having a couple of years ago. But yeah, it's definitely becoming more common and more of a focus. And I think COVID has allowed a lot of our clients to probably have a look at all the things we've put in place for them and actually get a better understanding. And we've got a lot more questions around things we've put in place, but also, those deeper conversations. And maybe it's given people a bit more time to consider, okay, I like this portfolio, but what's some things that I could do that more align with my beliefs?
Yeah, I mean, what I'd probably add to that is, purely from an investment viewpoint, there's a couple of different aspects. One is the way in which we're all working. So certainly from a policy framework, a lot more people are working from home. So I think some of the larger organisations have had to become more agile more quickly than they probably thought they needed to be. And in terms of the different investments within the portfolios, I do certainly know that a lot of big businesses are really thinking about their supply chain and where they're getting their products from. Conversations around warehousing and making sure that they've got access to more space domestically so that they can house more product, and we don't run out of toilet paper like we did quite a while ago. So I think that some of the processes will definitely improve as a result of those learnings.
Yeah, and so over time that'll flow through to investment decisions. So portfolio managers will be looking at companies who cater for those types of things and factoring that into the consideration. I guess as we go through talking about some of the frameworks and the way that comes up, that might come to to the fore a little bit more about how different investments are going to be structured in that way.
Absolutely.
Which leads me on to what are some of the different frameworks that are commonly used in this area to work out what fits in as a sustainable or ethical or ESG investment?
So there's a few different ways that you can look at it, and the approach that we've typically taken is to focus on what's important to, I guess, the ultimate investor or the end investor. So to start to build some of those questions into the process when we're face to face or we're meeting via Zoom, and to ask you, we've often asked around investment comfort zones, timeframes, that type of thing. But now we can ask, or actively ask you, are there certain industries or businesses that you don't want to be involved with? That's often the first conversation.
Mm-hmm.
But historically, we haven't really had the mechanism to exclude those from the portfolios that we've run. We certainly do now.
Mm. Yeah, the transparency thing too, where there's been ethical investments out there for quite a number of years, but once again, it might not be the ethical fund for you because you can't see what it's investing in. You're not sure what kind of filtering it's looking at in regards to the businesses it's investing in, and there's also, like, you can say it's an ethical fund, but what does that actually mean? And there's no actual, it's just a branding name. So it's important that you've got the transparency to then see that it's aligning with what you want.
Yeah. And it's no different to a lot of other managed funds, or I guess sectors that we've invested in previously. So if you were to invest in a particular product, and let's say it's called an international shares fund, now every single investment manager has a slightly different process or belief set in terms of the investments that they make in that fund. And that's the same with an ethical fund or a sustainable fund. It's really important that we know what's happening under the hood so that we're not sacrificing medium and long-term investment outcomes for that, I guess, peace of mind or sleep easy factor.
There's been some talk about, I guess, focusing on ESG as being a competitive advantage or a way of adding value to performance in investments over time. And I think a lot more the advertising and paraphernalia we're seeing coming through is talking about that. How does that fit into the sort of, what you're talking about there, Marsh, the range of different product offerings or ways that people are approaching it?
Well, I think one aspect that it is important to consider is there is a fairly significant level of demand or appetite for investments that apply an ethical or a sustainable filter. And that in itself is going to create a certain level of momentum and, I guess, capital flows towards these businesses that do tick the right boxes, that do avoid industries that investors don't want to participate in. So from an investment viewpoint, there's certainly, whilst there might be some element that it's the flavour of the month, I think medium to long term, as a result of the weight of money that's going to be flowing towards some of these strategies, I don't think that you're going to be worse off because of that. So it could very much be a medium to long term trend.
Yeah, I've seen a lot of the big super funds too start to divest from coal, and that can sometimes be as a result of their super fund members asking a question or just general media reporting as well.
Yeah. So are there any specific frameworks or you touched on before, Kathryn, about positive filtering, negative filtering? Can we maybe delve into that a little bit more, and that might help us then, I guess, push down the path of what the different options are?
Mm-hmm. So there's more on the sustainable investing side. Yeah, there's filtering. So people are probably more familiar with the negative filtering. So not wanting to invest in coal or armaments or tobacco, but it even goes to social aspects like exploitation and child and slave labor. And then you've got the positive filtering. So a lot of people think of green energy, but it's also things like medical and technological advancements that benefit society as well. So that's one easy way to find out if your investment is aligning with what you want, because they will maybe have a tendency to move more to the negative filtering or the positive filtering, but it's also the degree of how much exposure you want. So with coal investing, obviously there's a few mining companies that do that here, but it's not their primary business as well. So how much do you allow the coal production to choose to invest in that company or not? So Marshall, you've done a bit of research on this.
Yeah, I mean, we've had some conversations with clients recently actually that have flagged that they didn't want to participate or invest in businesses that, for example, had an exposure to thermal coal. And with some of the screens that we use or the filtering processes within the models, businesses such as BHP came up, Rio Tinto, Fortescue Metals, and a range of others. But we then had to really prosecute that to make sure that, well, there was concerns around Rio and Fortescue, but when you actually look at what's within those businesses, there's very little, if any, coal production coming out of those businesses. If anything, they're actually making products that society requires to continue to advance some of those technologies. BHP is the quirky one because a very significant level of their revenue flows come from obviously iron ore, but also coal. And whilst they've over the medium to long term have flagged that they wish to exit that industry, the challenge is that that's going to be a 20 or a 30, 40-year proposition. So that's where we really have that engagement with the client to make sure that they fully understand that that's the position of the business and they can make an informed choice as to whether they want to take that on.
I think that we've spoken about the tobacco one as a really interesting one about how far do you take it? You can screen it out and say, okay, I don't want to invest in a tobacco manufacturing business, and that kind of sits pretty comfortably with a lot of people. But then how far along the, as you said, the supply chain or value chain can you take that? So maybe sort of unpack that a little bit.
Yeah, so when we were looking at applying a tobacco filter in one of our products, one of the platforms we use, at the moment they've got the filters set to 0. So it means that, there's no Australian manufacturers of tobacco, so that was an easy one. But we saw 3 companies appear in the filter, and we had to go back and ask a few questions. And one of the companies was Wesfarmers, and that was because they sell cigarettes. We also saw Crown come through as well for the same reason. But the third one was the most surprising that we really had to question because the Commonwealth Bank came through. And it turned out because they sell cigarettes and tobacco products at the airport, and the Colonial as an investment company owns the airport and CBA owns Colonial, then all of a sudden this filter had filtered out CBA for tobacco. Yeah. So that was interesting. So that's where I was saying, it's how much filtering and where's your level of filtering, where is the balance, because obviously tobacco you wouldn't associate Commonwealth Bank with tobacco.
And if you explore and investigate the process that most fund managers go through, and you read the fine print, quite often it will say that we're able to invest in a business as long as no more than 5 to 10% of its revenues comes from a particular source. So whilst you might be investing in an ethical fund, typically there is that fine print that allows them to still invest in that business if they feel as though, broadly speaking, that business is being run for the greater good, even if they might have a 5% exposure to something that is a little bit less palatable. That makes sense.
Yeah, it does. Yeah, absolutely. I think it's great that, for us, there's a couple of questions coming up sort of in this line. It's not about us applying, our thoughts on what should or shouldn't be in a portfolio. We've now got the tools and the ability to have a conversation with the client and work out what's important to you, and then how do you delve into that to make sure it works for that client and that's perhaps success, which is great. Another question coming through. Thanks for the couple of questions. The question is about, we talked about the companies reporting on what they do and don't do, and there's one about, slave labour or, in their supply chains. do companies ever report that they have used slave labour, or how do you get it? How do the investment managers sort of investigate that and go into the directors and the supply chain?
Yeah, so a number of the research houses now are allowing or providing fund managers with tools that they can access the data they need to align with, it's called the UN Sustainable Development Goals. There's a series of 17 frameworks or goals that they're wanting to achieve, and some of those relate to slave labour, pornography, a whole range of things that are fairly, they're trying to reduce. So essentially what they're trying to do is access data points that feeds into this framework so that they've got confidence when they're investing in that business that yes, there's no exposure there. Or once again, if there is an exposure, it's particularly small and it's outweighed by something else that they're doing, which is amazing. But I would be fairly confident that they would avoid some of those ones, such as child slave labour, that type of thing.
Yeah. Another question in that regard is, brings up a term which I know you spoke about much, greenwashing. So saying, is there some of the stuff around, this was in reference to the BHP discussion around BHP exiting coal, but it's going to be a long process. So is there an element of some companies potentially greenwashing what they're putting out to the public, and how does that fit into the process?
There's quite a bit of that. And I guess the way in which we've looked at that historically is, with informed consent at a client level. But if I think about some of the fund managers that we've worked with, they've actually changed their approach. So there was one fund manager that up until recently had BHP in their portfolio, based on their viewpoint that they were doing more harm than good, and more good than harm rather, and the good aspects of all of the other minerals and resources in their portfolio were outweighing the impact of coal. Now, they've recently reversed that decision, and whilst BHP have got the headlines at the moment saying we're doing all of these right things, from an investment viewpoint, that investment manager has moved their flows away from that business for that very reason. If there's anything you want to add in that area?
No, and then that links to, are you really sacrificing returns when more and more people are going down the ethical investment route, and companies like BHP are going to be exposed and lose value because people just don't want to be aligned with that.
Yeah, it's definitely potentially. So that's good segue into talking about performance and I guess fees as the other top of the one. So often the two sort of determinants of the return that a client gets are how much they pay and then what the return is they get. Do you have to pay more to get less to invest ethically or sustainably?
There's a few parts to that question. So I wear a couple of different hats within the business. So I sit on the investment committee of AAN, and as a result of that, a lot of my time is spent meeting with investment managers, talking to researchers, and the data sets are incredible in terms of the fund universe and the range of investments that we can look at. But the data is quite clear that by applying an ethical or a sustainable filter, more often than not, you're not going to sacrifice a rate of return. Some of the best performing strategies in the marketplace at the moment, whether they're Australian share-based investments or international, are actually those that are promoted under an ethical or a sustainable filter. But hand in hand with that, what I would say is this conversation around fees. I'm certainly of the view, and the data really backs this up, that potentially because there is so much demand for this type of a product, and there really isn't as much supply. There isn't a very large investable universe in Australia for sustainable strategies. And as a result of that, fund managers are able to typically charge more than they normally would for an unethical fund, if that makes sense.
So have you got any examples of, maybe you can name names?
I do, yeah. I mean, some of it as well, it's because it's new, but if I were to think about, I don't know whether I should name names or not, but some of the major ETF providers, so that's an exchange traded fund. And if you were to watch the news at night and Alan Cole is on there or Tom Petrovsky, and they're talking about the Australian share market as an example, or the international share market, you could buy that entire market. So let's say you had $100,000 and you wanted to invest in the global share market. Now, we could place that investment and you would be charged a fee in the range of about $30 to $40 for that $100,000 investment. Now, that's a really sharp fee. But if we were to simply apply an ethical screen to that, and keep in mind, this is just a computer-based decision. It's not someone going out and meeting these companies. That fee would go from $30 to approximately $180. Now, in the whole scheme of things, $180 across $100,000 portfolio is actually quite cheap. But is it 6 times? Yeah, I don't know if that's appropriate. But we're already starting to see more products come into the marketplace that are more keenly priced. And this is where, I guess, conversations that you can have with managers to represent larger groups of clients at scale allows you to kind of push those fees downwards, which is part of our role.
Yeah, absolutely. And it's important to think about, I guess, then it comes back to your framework and your investment philosophy and how that's applied at an individual fund level as well. So the example you just gave them from an index viewpoint, you're not making any active decisions. You're not. No. There's no one going knocking on the door to see whether they're acting ethically or they're just relying that computer screen. Is there things that should be done or are done differently from an investment philosophy viewpoint when you're sort of looking into this space, or does it fit into the overall similar framework?
I do. Do you want
No, I don't want to.
Yeah, so I guess this comes down to at a client level, really. Whether or not, I look at the two components. You've got a sustainable strategy and an ethical strategy. The ethical strategy is someone that wants to make sure that 100% of your portfolio is invested in businesses that are not just negatively screened, but also strongly positively screened. So they might be investing in advanced technologies to deliver better outcomes around energy production and a range of other things. But there is certainly a greater degree of risk associated with that type of a strategy. Within the sustainable framework, I guess we've kind of adopted the viewpoint that we'd like to be a little bit pragmatic. We want to make sure that when our clients invest their monies, we're not sacrificing our beliefs and our philosophy for the ethical component. So we want to make sure that they're investing in the right businesses so that they've got peace of mind and comfort. But we also want to make sure that we have equal weightings between, for example, between Australia and overseas investments. We don't necessarily want to have biases, and we want to make sure that we can implement all of the things that we normally would, but with the benefits of that sustainable screen. If that makes sense.
Mm-hmm. It does. And so how do you then look at different managers out there and how that sort of fits into that philosophy which we apply across? How does that approach made? Access to information, and how do you sort of screen those people?
So there's a couple of different components to it. So within, I guess, the AN family, we have the view that if you think about Australian shares, we like to have an exposure to at least 3 managers in each portfolio. And that one of those might be an index strategy, so that's very low cost, very efficient. And then we would have typically a value and a growth Australian share manager style. So we're not trying to pick the winner. We just want to pick great managers across each of the different categories. Now, when we look at a sustainable or an ethical approach, we do exactly the same thing. But we have, I guess, that added tier of saying, well, we want to make sure that the managers in that portfolio don't exceed, for example, a 10% weighting or revenue stream from one of those areas that we wish to avoid. So that might be tobacco, controversial weapons, fossil fuels are a challenging one, but we implement that screen to ensure that essentially some of the big polluters are avoided, but there are some that, once again, they do more good than harm. So that pragmatic approach.
Sounds good. So how do clients access these types of investments?
Mm-hmm. We've got a couple of different ways now that we can apply individual clients' ethical standards. So we've got the ability to apply a filter. So if they say tobacco and gambling and coal, we can apply those filters. We are still working on the percentage of, like Marshall said, with the tolerance percentage. So at the moment they're all set to 0, but we're working on that to work out a tolerance that works well with our investment philosophy. We've also got the ability now, with more transparency in these investments, to actually lock out individual shareholding. So it's easy for us to go through and take out the gambling ones, but if all of a sudden a fund manager decides to put a new one in, it means we're manually changing each time. But it's an easy way to just take it out and leave it out. And the third one is our Marshall's working on an actual ethical model that will then mean it probably aligns with what we believe, and but the transparency means that our clients can see what's in there, and if they're fine with that, they can do that. We can probably apply a more we can still apply a screen onto that, but it won't need as much as maybe existing models.
So I think it's interesting if you look at it, it's a layered approach, isn't it? You can say, I'm going to screen out everything that could possibly do harm and only put in things that could possibly do good, to I'm going to screen out certain things which I feel really uncomfortable with across as a broad brush.
Yep. Or
you can say, I'm going to allow the investment manager to pick what they think are the best companies that represent my financial interests, but I want to have a look and be able to pick a couple of companies. If there's anything that I don't like, you can screen that out as well. So I think it's great to have that flexibility and that ability to pick and choose and adapt that through the tools and I guess the platforms we've got currently available. So Kathryn mentioned the model that you're working on from an AAN investment community viewpoint. Tell us a little bit about that, how that's heading.
Yeah, it's certainly taken longer than I expected, and that's because we want to make sure that we're doing the right thing. We're doing all of the relevant research. The due diligence has been done correctly, and there's actually more complexity in designing something like this than the typical models, because if we actually document that we don't want any single business within the portfolios that has a greater exposure of, say, 10%, we need to be able to back that up and make sure that it's not going to sit in the portfolio. Mm-hmm. So one of the reasons why it's taken us a little bit longer to deliver this is because we want to make sure that when putting this strategy, we're not diluting the possible outcomes that our clients are going to receive. And when there's significant demand for products of this nature, often you will get manufacturers producing new products that really don't, in my personal viewpoint, deliver the investment outcomes that clients or investors are seeking. They might deliver the peace of mind outcomes because the wording is great, but we want to make sure that your long-term investment outcomes are going to be achieved as well.
How do you do that?
So, there's different ways that you do it, but you want to make sure that those that are managing the money have got very clear processes and systems. You want to make sure that they've got redundancies built in so that if they lose a staff member, there's someone else that can step up that actually knows how to manage that money. And you want to make sure that they consistently do what they say that they're going to do, and they're providing you with guidance and research and reporting along the way. We very much are of the viewpoint that our clients like to have access to that transparency, and the transparency that you see, we probably get 4 to 5, 6 times that transparency as a result of engaging with the portfolio managers. So once a manager is in our models, we've got regular communication with them. We know what they're buying and selling and why. Obviously, we don't freely distribute that information, but it's important because clients will often come to us and say, Marshall, can you please tell us why the Commonwealth Bank is in our portfolio, or another business name, BWX or Bingo, why is that in our portfolio? And we can actually go and ask the question of the analyst or the portfolio manager to provide some guidance as to why it's there. And that's been a really useful feature of our relationships with the managers, particularly throughout volatile times, because we can engage with them, ask questions, seek some guidance as well.
And are the managers that are looking likely to be part of the sustainable ethical investment portfolio very different to the ones that are in the other models, or similar in name and style, or
similar in style? There are some new managers in there that are not in our other models, but it's certainly not a substantial leap. So there's brand names that have got great pedigree that we've worked with historically, that also have an ethical or sustainable type portfolio. We're using those so we can leverage that relationship and the scale that we have across the other models to drive down the costs associated with that.
Great. So we've got a little bit less than 10 minutes to go. So if there's any other questions out there, just one more came in now, which is great. So if there's any other questions that you would like to put out there, let me know and we can go through those. But what I might do is, actually I'll ask you guys, anything else you want to add, Kathryn? Anything you haven't talked about that you think is important to put out there now while people are thinking about some more questions?
I think it's just off the back of this, if you haven't really considered this, but you've come to this webinar because it's something that you've heard about because it's a lot of information out there. Just have a thought about those filtering, those filters, and what is actually important to you, and how I don't want to say flexible, but where is the level of that you're willing to tolerate. So, have we blown your mind by the CBA example, but now that's it? Or I think sometimes there's some easy. I mean, the most common one we get is gambling, and that's a really clear-cut one because the gambling companies, that's what they do, is 100%. So they're really easy for us to quickly screen out. But yeah, have a think about, because a lot of people, we have the conversation and I say, look, is ethical investing a consideration for you? And they say, oh yeah, I think so. And then I have the conversation and then it's either too hard or I'm not really that committed. But I think just to know that this, even just the ESG part, that companies do have this at the front of their mind and they are trying harder because the whole society is demanding that they improve. So there is an element in there. It's just how far you want to advance that.
Yeah, I think to your point on the ESG, it seems to me that if companies aren't meeting their ESG requirements and policies, then you probably don't want to be investing in them, and they're probably not going to stack up as a long-term investment anyway. So that seems like a no-brainer entry point. But to your second point, it's been hard to have these conversations with clients in previous times because somebody might say we feel uncomfortable with these types of investments, but it's hard for us to act on that. So it's almost like you're better off not having that conversation, and you could go down a one way, or there wasn't really an in-between sort of ability to implement and take an action, which is exciting now that there's more opportunities already and some more coming through down the pipe. Just one more question came in for you. I think Marsh probably best to handle this one. When looking at the managers, do you look at the industry experience and track record of managers individually?
Yes, we do. So each of the managers, I guess, when we're going through the due diligence process, will capture information on, obviously the number of team members within that portfolio that manage that portfolio, where they worked before, how many years they've been in the industry, how many years they've been together. So we definitely capture that.
Okay. Anything else you want to add before we do one last poll and wrap up?
Yeah, I mean, the only thing that I would add is that, if you'd have asked me that question 5 years ago, do you need to give up returns to invest in this space? Based on the product set that was available then, and perhaps a little bit less on the demand side, I would say yes, you might have. But these days, over the last several years, all of the products and I guess investment styles that we commonly use are coming to market in this space. So I just think that it's good to see, and I think that will only improve with continued demand.
Yeah. Options always good.
Yeah, I mean, one of the things that we always look at, and the phrase that we use is, within each of the asset classes, we always have a reserve bench. So we might have 3 fund managers that are in a portfolio managing Australian shares, but we've actually got a fairly deep reserve bench because we want to make sure that if something happens that's consequential with one of those fund managers, within 24 to 48 hours, we can take them out and put someone in, really to protect your interests.
That's great. Thank you. All right, I'm going to launch the second poll to get us heading towards the finish line. So this is a pretty straightforward question, 4 straightforward answers. Launching the poll now, hopefully you can see that. So would you consider ethical investments for your portfolio? Yes, definitely. Yes, possibly. No, not really. Or not sure. So I'll give you a little bit of time to... This is really a test of Marshall and Kathryn's communication ability, where they've scared people off or encouraged them to think further, which is good. Fortunately, no one's saying no yet, guys, so that's promising.
But Marsh, I think we'll, while you're still working on this ethical model, obviously when we have it ready to go, we'll be communicating that out to our client base broadly. So it's a consideration and you can have a chat with your advisor if that's something you want to invest in. But we're definitely...
Yeah, the screens that Kathryn's been speaking about can be applied at any time. That's a very easy first step for most clients. Either the removing a specific business or removing an entire category of business or industry.
So we've got pretty much 50-50 or 43% said yes, definitely, and 57% said yes, possibly in regards to considering ethical investments. So it's great to at least further that conversation and see where that might go. Just going to check if we've got any more questions. Cover off. Got a couple of comments in there. Thank you for the comments. So just in relation to the model that you're working on, Marsh, any thoughts on when that may be available? I know Kathryn said we'll keep everybody in the loop and let you know. But,
yeah, so we've made our initial submission to Premium for that, and we've got to add some additional documentation, most likely in the month of October. So I think it'll go before their investment committee late October.
So maybe before the end of the year we'll have something to start.
Yes. I mean, realistically, every single one of the investments that is within that model are already approved for use by AAN. So if you are firmly of the view that you wish to transition to that, you can do that. We can support you and make that step initially, and use the model once it's approved.
All right, I think we're just on time. So we'll start wrapping up there. Thank you very much for your attendance and participation and interaction in regards to the polls. It's been great. Thank you, Marsh and Kathryn, for your expertise and sharing the wisdom with us. Hopefully we've encouraged you to think about a little bit more, as Kathryn said, what might be important to you in regards to how your portfolio is positioned, and start a conversation with your advisor or come directly to Marsh and Kathryn and they can help you with that as well. So as we said, there will be some slides which we've got, which may be helpful for those visual learners, which we'll post alongside the copy of this presentation, which will be up on our events page in the next 24 hours or so. And then a newsletter will be going out next week, and I'll have a copy as well. But if you want any more information, then get in touch and let us know. Our next webinar will be on October the 22nd, same time. It's going to be on another exciting, interesting topic of behavioural finance, which is really about how our behaviour and our biases affect our financial returns and financial well-being. So I'll be joined in that one by another one of our Evalesco advisors, Bruce Screeve. So look out for the registration link for that in the newsletter coming up as well. Once again, thanks, Marsh. Thanks, Kathryn. Thanks everybody for joining us. Stay safe and be healthy, wealthy and happy. See you next time.
Bye.
Hey guys.